The following is a station editorial.
This is Holland Redfield. With the U.S. and international economies in a financial meltdown, one can only compare it with the Great Depression of 1929. The territory finds itself at the mercy of forces that are beyond its control. Never in our history have we seen circumstances in which we have to hunker down and hang on for the ride. The DeYoung administration is sending clear signals that it has to move to realign the 2009 budget. Appearing in front of the Senate Finance Committee of the 27th Legislature, it outlined the severity and sober realities of the problem. With both the national and local governments being in a lame duck posture, it creates an additional constitutional awkwardness that tends to compound the problem, as demonstrated in the 27th Legislature passing the buck to the 28th Legislature and adjourning sine die. We concurred with the governor that the legislature lacked a sense of urgency in dealing with these severe economic problems. It is our hope that the chief executive calls the legislature back into session, as it is in his authority as per the Revised Organic Act of 1954. If this does not hit you between the eyes when it comes to balancing the budget, nothing will. Now let us walk you through the dramatic decreases in 5 primary revenue streams, which project a shortfall of $47 million. The projected real property tax collections have been lowered to $105 million from $128 million. The corporate tax revenues are expected to be down from $200 million to $160 million. Individual tax revenues have been lowered by $5 million from $430 million. And expectations from gross receipts tax have been lowered from $160 million to $147 million. This is real money, and it hurts. Our leadership must find creative ways to work around this dilemma. It looks like these massive shortfalls have created hard-to-find money for salary increases, hard-to-find money for the 3% increase to the GERS contributions, increased costs for government employees' health insurance, contingency funds to pay judgments against the government of the Virgin Islands, administrative costs for our hospitals, hard-to-find monies to repay the funds owed to FEMA, and monies for various leases owed by the central government. We find that these projected shortfalls are overly optimistic and simply do not reflect the gravity of this situation. Just as the Obama administration has made the economy number one, it is our hope that the DeYoung administration follows suit. There is no question there is going to be a second stimulation package from the feds, and that the emphasis will be on rebuilding infrastructure through capital improvement projects. We have only to look back at our own government's dismal performance, where it has been forced to return millions of dollars of federal funds back to Washington. It is our recommendation that the administration be locked and loaded, where the executive branch puts in place a task force whose primary function will be to cut through the bureaucracy and red tape. If we as a territory continue to operate as business as usual and fail to fast-track these funding opportunities and projects, we will lose these funds to other jurisdictions that have the skills to put the resources to work more quickly to create the sorely needed jobs to stimulate our economy. We have a lot of work to do. Let's get on with the task.
Please email your comments to our editorial department. Our email address is editorial@viradio.com. Please include your name and other contact information.